What's good, y'all? It's HB Punch and Profit. We are continuing our little series of tape reading and paper trading. It is March 14th, 2025. Got a trade playing out here. I'll get into the nitty gritty details in a second. Just trying to see what's going on the charts. Right here was the inversion. And if I can, I'll try to add to the position right here. Man, I hate when it does that. If it allows us without moving. Oops. Oh well. It is what it is. Uh, Originally I had our entry somewhere up here. Added more. So let's add a buy limit. Let's add another right here. So we'll take a little bit off the board at this low right here. Okay, now obviously I wouldn't put this much leverage on my live accounts. When you get on M and Q and the NQ, uh, sometimes they don't show, like they're not the same exactly in terms of data. Sometimes the MNQ doesn't show all the volume imbalances that the NQ would, and that's critical information for my strategy. Looks like we're gonna get our first target. We should hit this wick, and I would say we'll adjust our stop when we get our first target, if we get our first target. But that's the only reason I am on the NQ. If I'm going to build a position with multiple contracts, I'm going to do it on the micros. But just for the sake of this, I don't feel like flipping back and forth through the NQ and MNQ and NQ to see the nitty gritty little details. So at this point, you probably want to bring your stop right here to the advanced market structure shift, get some profit. Now, or the trade's profitable completely. You know, at this point, we're going to not looking to get everything off the board in this trade. You know what I'm saying? Like, this is experimental, so we're gonna see how far it can go. The objective isn't to uh, take profit off the board immediately. Although, if this was a live trade for me, I'd probably be done here. After I hit that low right here, I'm off the boards. It's Friday. I'm gonna have a good weekend, and I'm done. This was a little bit tricky to play. Let's see if we can pull up ES. Oh, whoa, what's going on here? Wow, look at that move. We take out this low. Let's secure. Let's secure. It's too late now, huh? I wish I took this in my live account. So you get these lows right here. Okay, if we can continue back down, we'll buy one contract back. Let's just buy one. If it lets us buy. For some reason it doesn't want to. There we go. Hopefully it didn't take us out of the it took us out of the completion. Yeah, it is what it is. We can still monitor the trade. My computer's lagging. I've been trying to clean it up. But this is not bad. That's definitely, if it hit this low right here, I probably would have been out of the trade. But I think we got the main understanding of how this trade played out. So it's okay, even though we took profit off the board. In a live trade, right here would be a target. This lows right here would be a target, and which it did hit. So very nice paper trade. Computer's lagging a bit, so I couldn't really make clean exits, but I just want y'all to see how this played out. Okay, now you had, this was a little bit tricky to play, but we'll go into the detail and we'll continue to monitor this to see how far it goes. So far 144 points. Okay, this is a paper trade, folks, just letting you know. Wish I took that in my live account though. Okay, so what happened up here? Let's go on the daily and see if we hit some sort of gap. So yeah, we were in a bearish fair value gap. Okay. Now I mark out these volume imbalances to make sure I take into consideration that this is a big fair value gap we're in. Let me just remove them real quick. It's not the prettiest way to look at it, but I got to make sure that I take into consideration those volume imbalances on the daily time frame, so I mark them out. But if I were to put the whole gap in there, right, it would be from here to here. All right, that was our bearish fair value gap. Obviously, we wicked up top here. Okay, and then we got a signal to the downside. So you see we're in the red. It's 1050 or our 950 1010 macro. We get this inversion. Let me take this off now. We get this inversion. We sweep the high. Now let's see what ES was doing. Maybe we got a SMT. I can't do it. I don't have the subscription to TradingView. But maybe we can switch over for a second. Let's see. Yes. Did we get an SMT? Looks like we did. I think that was the case. Looks like we got a SMT. Okay, another confluence. Let me check one more time. I might be tripping. Looks like we did, but I could be tripping. Okay, so what happens here is we get this inversion. We have, let me mark this out for you guys because it's hard to see if I don't mark it out. So we have a bullish gap here. Okay, 1, 2, 3. All right, so we take it from this wick right here. Okay, that's our bullish fair value gap. Bear with me, you guys. You know, this is the first time I'm doing like a tape reading series. So that's our bullish fair value gap. 1, 2, 3. Volume imbalance. We go to the wick. Okay. Then we get this bearish fair value gap. 1, 2, 3. Volume imbalance at the top. Go down to the wick. So now you see where that overlap occurs. Right? Small little overlap there. Now we'll get rid of both. You know where that inversion occurred. Boom, boom, boom. Just pull it up a little bit, make it a little bit cleaner. We get our advanced market structure shift right here. I have no idea what's going on with the damn charts right now, so I apologize. Maybe if I toggle it back and forth. Yeah, I have no idea what's going on with this. But we did go down there, right? We invert, we get a candle close below the advanced market structure shift, As soon as we close and get this inversion, my entry ideally is going to be right here, but you have to have the higher time frame narrative proper, the confluences. Boom, you enter here. Now my entry was a little bit lower because I added to the position at the advanced market structure shift as we came down. That's where you can add once you get the candle close. We got the candle close under the advanced market structure shift at the blue line. I added into the position. Okay, and then what I did was take profit or take a contract off the board at our first target, which was here. So we hit that. I take one off the board. Okay, we bring our stop up to break even. Okay, and it continues to push down. This thing was moving fast, so I couldn't take as many, or I couldn't slowly take contracts off the board. 2 to 1, I would have excuse me, 2 to 1. I'd probably taken one off the board here. I think I had about like 4 contracts on. Taking one off here, taking 2 off here. All right. Then we bring our stop to target 1. Okay. Once we hit our second target, which is the 2 to 1 risk to reward, okay, then our third target is going to be these lows right here. All right. That offered you a nice 130 points, and then ideally I would have left the runner, and I probably would have moved my stop up once again to target 2. Once we hit target 1, okay, I bring my stop to the advanced market strict or structure shift. Okay, once I hit target 2, I bring up my stop to the target 1. Once I hit target 3, I bring my stop up to the 2 to 1 risk to reward. Now, it didn't play out that way because my computer was lagging, and that's the reason why I'm not doing live trading right now. I need to get my computer cleaned up before I get back on the charts and start taking live trades. Took one yesterday, but I didn't like how my computer was acting up, and it's Friday, don't want to have a bad weekend, so we'll just do and tape reading and paper trading. So once again, let's go over this one more time just to be clear. I know it's kind of messy right now because of the lag, but we come up here, we enter into a bearish SIBI on the daily time frame. Okay, we sweep this high, we get an inversion, we get an advanced market structure shift. Now we can get our entry at this inversion. Boom. That's ideally where we would like to get entered in. Okay, because that tightens up our stop. Instead of entering in at the advanced market structure shift, you can do that, but you're gonna have a bigger stop. You can try to get that entry at the inversion. Okay, the where the gap begins. Okay, where that orange box is. Now you can keep your stop a little tighter if you want, maybe at the candle body high, right? For me, I always just play it safe. And I wouldn't be using minis in this case. I'd probably be using micros if I was going to use multiple contracts to build my position. So I would have entered in here maybe with 2 or 3 contracts. If we get that candle body close under this blue line, I'm entering another, or I'm going to put a limit order there, wait to get tapped in. If I don't get tapped in, it is what it is. Alright, we move down, we hit our first target. Alright, once we hit our first target, we move our stop. We can move our stop at the advanced market structure shift. You're coming out with a W no matter what. Okay? Once you do that, once you hit that first low, Move your stop to the advanced market structure shift. If you got your entry in at the inversion, now you're in the profit. Okay, we hit our first target. We continue to move down to our second target, which would be a 2 to 1. Okay, then we bring that stop even further down to target 1. Okay, so now you got even more money guaranteed with some contracts still left over. And at target 2, obviously, we take a contract off the board. All right, target 3 is this low. We hit it. We have another contract taken off the board. We move our stop to the 2 to 1 risk to reward. We let the last contract ride, and we get stopped out right here at the 2 to 1. Very successful trade. Ideally, that's one way you could have played it, right? And that's the point of these tape readings. We are messing around with different ways to optimize our strategy to get different edges. So very cool trade. Once again, I wouldn't over leverage. I'd be on micros if I'm going to put multiple contracts on, and I'll build my position. Okay, I want to build my position ideally in here. Okay, I want to ideally build my position within here. And the cool thing about that is you can get a better entry. You can take a little bit of drawdown away, especially if you're using micros. You can build that position. And even if you have a little bit of a nasty pullback like we did here, let's see how much drawdown we took if we got the entry at the inversion. Yeah, 15, that's nothing if you got micros, man. And what you can do, you can say, hey, I'm going to put 2 contracts at the beginning of the inversion where the gap is. I'm going to add 2 more contracts if we fill that with a wick or candle, right? 2. And then maybe I'll hold steady from there. So that's 4 contracts you got on. Your entry will probably roughly be between the inversion and the latest swing high. And that's nothing. Okay, so essentially you would have built your position somewhere around here and only had to deal with about like 8 points of drawdown, and then you would have had a little bit more money you could add to the position so you can get a bigger reward if it goes in your favor. Okay, you can also add at the advanced market structure shift. It'll pull you down. We aim for our target 1. We take a contract off the board. Then we bring our stop to the advanced market structure shift. We hit target 2 to 1. Okay, then we bring that stop even further down from the last target. Okay, then we hit target. Take another contract off at 2 and 1. Then we hit target 3. Take another contract off. Bring that stop to 2 to 1. And then let the last one ride as much as it can with the stop right here. So if I had a stop, okay, starts off up here. It starts moving in our favor. Okay, we bring it to the advanced market structure shift when we hit target 1. We hit target 2, we bring it up to 1, we hit target 3, we bring it to the 1. Our last contract, we just hold it and see what can happen. Maybe we get stopped out, or maybe it continues to ride in our favor. Okay? And remember, time and price. Okay, this occurred during the silver bullet hour. It occurred during the 950 1010 macro. Awesome trade. Not really paying attention to what's really going on. I was pretty neutral on the higher time frame. So I was looking for buys or sells. It was a little bit tricky. We're in kind of a tricky range right now. But let's write down those parameters real quick. Let's see. 1 higher time frame, neutral. All that means is we're looking for buys or sells, and my kids are just causing chaos in the background. 2, inversion. We're looking for that inversion. Okay. Now, yes, there are some other confluences like the SMT and, going into a higher time frame gap. We're inside of a higher time frame PDA rate where we get our signals right. But I don't want to confuse you guys too much. I just like making things simple and straightforward. Advanced market structure shift. I like the parameters to be very, very simple to understand and see. And I think this kind of numbered processes, very easy to understand, and keep it like 4 to 5 steps. 3, advanced market structure shift, and as you go on, you can kind of tag on the rest of the confluences. 4, stop at swing high. 5, take profit 1-to-1 or more. Me, I don't like holding on to trades, but that's something when I paper trade, I'm going to work at. And how am I going to work at that? How am I going to combat my fear of holding on to trades? Well, I'm going to build into my positions, and I'm going to take partials along the way. That way I'm not just sitting waiting and then I see a massive move and it just evaporates, right? I can take hits along the way and then bring my stop as it goes and let it run as far as I can, right? So that's one thing I'm going to work on personally this year. Usually I just like putting one contract on or a few contracts, and then I just wait and I hold. I keep my stop where it is. I keep my take profit. But one thing I'm going to start working at is building positions, taking partials, and then moving my stop along the trade. So higher time frame neutral. Okay, we move into a SIBI on the or a daily PD array. We get a signal, the inversion, the advanced market structure shift. May have even gotten SMT. I can't see it because I can't compare it along with the ES. We put our stop at the swing high to play it safe. It's just a consistent place you can aim to put it. And if it's too many points from your entry, then just lower your leverage or get on the micros. We're going to take our profit at least 1-to-1 or more. For me, usually I just like to do my 1-to-1s, especially if I got a. In this case, I would have went for more, right? I would have aimed for this low instead of just going for a 1-to-1. But usually I like taking 1-to-1s, usually. So cool trade that played out. Hope you guys learned something from this. I know it wasn't the cleanest. Like I said, my computer's a bit laggy right now. I gotta erase some things from it. I've been uploading a lot of videos, so that's kind of killing all the memory and space on the computer and slowing it down. So next time it'll be a little bit cleaner. Or if we get a trade later on, maybe I can re-upload something that was more precise and clean in terms of execution. But nonetheless, you saw this. This was a great trade. It was a winning trade. It offered you almost 150 points. Okay, depending how you played it. And if you just kept your stop where it was, it probably will go past 150 points. Remember time and price. This happens during the silver bullet hour, as you see, and the 950 1010 macro. So that's very important. That can filter out a lot of garbage when you wait for those key time periods, when you wait for the macro or the silver bullet hours. Instead of looking for trades all day, this can be very useful. So HB Punch and Profit. Hope you enjoyed the video. Comment down below, like the video, subscribe if you're new. Peace.